Hello and welcome. You are watching Last Tick here on News9, where we break down the day's action on the Dalal Street. And Indian markets now, they have snapped out of their 6-day winning run to end lower on Wednesday. Remember, we started the day higher where Nifty was able to make a fresh record high of 22,249 in the morning trade itself. But after that initial run up, the index was pretty much trading flat for the majority of the session. However, in the last 2 hours of trade, the markets cracked and bears had now taken control. Nifty gave up almost 200 points in the afternoon trade, but still today's crash till about the all-time high levels had rallied nearly 1100 points. So 1 or 2 day correction shouldn't change the overall bullish texture of the market. Rather, it should give investors who are waiting on the sidelines to opportunity, waiting on the sidelines for the opportunity to participate on this way up. They should be able to find a certain entry points. That said, bulls will still need to defend certain levels. The first will of course be 22,000. It's a critical psychological level for the index. Below that, the 20-day moving average placed around the 21,800 mark will be another crucial support for the index. But for the momentum to turn from bullish to bearish, I think Nifty would still need to break below the 21,500 mark, because remember, when the index was consolidating over the period of the last 1 month, that was a floor and that was a a level from where the index would bounce back, and ultimately it scaled a new record high. But that's on the downside. On the upside, the first key hurdle would come in around the record high levels of 22,249 and then 22,395, followed by 22,535. Those are your Fibonacci extension levels from the recent low of the January low to the record high of 22,249. But moving on, Sensex gave away nearly 430 points and it ended just above the 72,600 levels. Remember, although Nifty had scaled a record high, Sensex was still trading below its record levels. The index managed to claim back 73,000 yesterday. In fact, we opened about 73,200 levels or so in today's morning trade, but we were still about 200 points from those record levels, and that is for Nifty. The broader markets now, they were under a fair bit of pressure today. Both mid cap and the small cap indices corrected by about 1% or so, in fact more than 1%, and this was the second straight session of losses for the mid cap and the small caps. Volatility on the other hand, that cooled off slightly, and India VIX is once again back below 16 sort of levels. But let's move on to the sectors that were in focus today. The media stocks, now they were the worst hit segment of the market, and that was primarily weighed down by the Z Entertainment stock, which tanked over 14% after certain reports suggested that SEBI has found that about 241 million rupees were diverted from the company. IT stocks also continue to face some bit of a pressure. Investors are certainly jittery ahead of Nvidia's results that come out later today in the US. And remember, the US markets, they are at also a record high. In fact, in the last 4 or 5 months, the rally that we have seen in the US market has primarily come from your Magnificent 7 stocks, which includes your Alphabet, Google, Facebook, and Nvidia also. And Nvidia specifically, that has been a stock that has led this charge. It has rallied by about somewhere close to 44% on a year-to-date basis. But the tide, of course, did change slightly yesterday. It corrected by about 4% or so, and that was ahead of the results. So certainly there is a little bit of nervousness around the results of Nvidia, and that is also weighing on the IT stocks. And the inflation print that came out last week, both the wholesale and the retail inflation print in the US, that came out hotter than expected, which pushes back the rate cut expectations. And since a lot of these IT companies, they have a significant portion of their business coming from the US markets, that perhaps was also weighing on the IT stocks. Auto and pharma stocks too corrected. Both indices gave up about 0.5% today. But on the other side, we saw some bit of rally in realty stocks, PSU banks, and your FMCG bag. Actually, FMCG ended on a flattish note by the day's end. But with that, let's also bring on board Mr. Amit Gupta of Fintrek Capital. Thank you for joining us here on News9, Amit. What do you think led to today's correction? Is it just a good old shakeout after this 6-7 days of rally that we had seen, or is there more to the correction than meets the eye?
Yeah, hi Suyesh, thank you for having me. No, I think our working target for Nifty for last 4 months has been around 20 to 300, 400 kind of a levels. And we continue to believe that the risk reward for Nifty from current levels is actually negative. So as we are hitting the resistance levels, we are seeing some profit booking happening. There is a little bit of jitters, with respect to global cues which are coming. The inflation print has come a little hotter than expected. The Red Sea issue is seeing the shipping costs going up. There have been a few sectors like textiles, where we are seeing some order pushbacks as well. So I think there are some jitters. Don't think that will lead immediately to very big sharp fall. But this is a market where our 2% or a 1% correction can happen very quickly within let's say 1 hour or 2 hour also. So there are definitely some jitters in the market, and as I said, the risk reward is a little bit negative at this moment. So we are seeing a lot of profit taking happening.
All right, and are you keeping a track of Nvidia and the results that come out today? Because I mean, the US markets now, they have been on a rally. A lot of the upside has come from your tech stocks, the mega cap tech stocks, and the theme, of course, has been AI, and Nvidia has led the charge. But there seems to be some bit of jitteriness that we are seeing in the US markets. The stock gave up about 4%. Could that cascade into Indian markets as well if the results are slightly disappointing even?
See, I mean, Nvidia has been the biggest gainer in this whole rally which started from 2023, the tech rally actually, which started the AI rally as it they call it. So I think there are some jitters with respect to there has been such a sharp run up. People want to take a little bit profit because stocks tend to move very in a very wide range in US because the markets are open almost 24/7. So I think there was some profit taking happening. Obviously, with such sharp run up, a lot of good news is already priced in into the stock price. But whether it sort of continues and it moves to other parts of the market, that we have to wait and see. Having said that, a lot of the tech stocks, especially Apple, they are looking very bad in a technical way. In fact, Apple is at a 52-week low now. So my sense is that in the tech market, if the Nifty shares or the results which are going to come today evening, if that disappoints, we can actually see a little bit of scare in the Nasdaq index, and as a result, that could even further spread across all other markets. But that could be a short-term scare.
But could that impact our markets and especially the IT sector? Because of course the IT sector now, that has been seen some bit of a correction in the last 1 week or so. One of the reasons is of course the inflation print in the US, both at retail and wholesale level, that came in hotter than expected. But it seems that Nvidia's results is also adding to that jitteriness.
No, I think the IT rally of the past month has been very counterintuitive. The projects are actually getting slowed down, at least in the IT services companies of the top 4 5, which are there in the market, in the Nifty especially. There have been job losses. Net, I think, in even in 2023 and the first week of January, first week of this year, in the January, we have also seen again job losses happening, not just in IT services, even in a lot of fintechs, the job losses are happening. So I don't think IT is in that good space that it would command a 10 to 15% rally, which happened in the last 45 days or so. So My sense is that the fundamentals really don't back up that rally. Indian IT services companies are not directly play on the AI boom, which is we are seeing in the US. There could be a mean reversion of this rally. At least I would expect 50 to 66% retracement of this rally that can happen over the next few.
All right. I mean, I think the pressure will continue for the IT stocks, but one segment of the market that is participating on the way up has been the banks, especially the private sector banks. Now, they have been instrumental in taking the markets to all-time high levels, and it seems that the market is finally taking cognizance of the fact that some of these larger private banks, they are available at a attractive valuation. But two stocks specifically have largely underperformed: HDFC Bank and Kotak Mahindra Bank. What do you prefer between the two?
No, we have been actually underweight on lending financials for quite some time. We tend to believe that names are being compressed. The loan growth is not really picking up. The capex cycle, the private capex cycle, is not really coming back with a with a very strong force. And now we have this deposits problem also. My sense is till the point RBI gives strong hints of rate cut, which could happen only when the Fed cut rates. We are at least seeing a 3 to 4 month kind of a period where the market will be driven more by sentiment rather than by numbers. So you have the news of, let's say, Kotak Mahindra Bank, where the new CEO that has done the first management reject. You also saw in HDFC Bank. The CEO coming and giving out an interview. There was an analyst meet also recently in HDFC Bank, and that is sort of playing a little bit on the sentiment. But even technically, I think we are just playing the ranges. Nothing is really getting broken out. And since we continue to expect that deposits will face much scrutiny over the next 3 months till interest rates remain high, or till the deposit rates remain high. My sense is, we are still looking at a sort of a range bound markets for the lending financials.
Right, but moving on, Juniper Hotels IPO has opened for subscription. Now, the IPO so far at least has been subscribed by about 10 times. Is that an IPO that's on your radar, Amit? Because, considering especially that the immense rally that we have seen in some of these hospitality stocks and, the renewed focus on this sector.
Yes, most of the hotels have done well. Hotel stocks have done well. Juniper Hotels is basically Hyatt Hotels, and it has a portfolio of about 7 hotels. There are a few service apartments also, around 1,800 to 1,900 keys are there. So there is a lot of excitement for this space. Recently, we saw Park Hotels also getting listed with a good gains. In this case, the number of hotels are less. I think there is about 7 hotels, and mostly in metros, Mumbai, Delhi, Ahmedabad, Lucknow, etc. And apart from that, what I have learned is that the 2 hotels in Delhi and the one in Grand Hyatt Mumbai, these three actually contribute to almost the 75% of the revenue. So it's a very urban based hotel, and not so much in the tier 2, tier 3 cities. I think the only tier 2 cities I saw was Raipur and Hampi. Mumbai asset accounts for almost 45% of the revenue. Delhi asset is about 28, 29%. So together it's almost 75% of the revenues. But the good thing is that all these assets are located very close to the airports, whether it is domestic or international airports. In fact, the Hyatt Mumbai is very close to BKC also, Badrakurla complex. In that sense, these are very well placed hotels, and doing very well, recovered very smartly from the COVID phase. So there is something to look at. I haven't really gone through the valuations as such, just to see how much is the debt level and how much they are paying the debt in the IPO. Because I believe there is a component of OFS also in the IPO along with the fresh issue. But yeah, it looks good. But I have to go look at the valuations as well.
All right, that's the view on Juniper Hotels. Remember, the IPO has opened for subscription today. It will be open for another couple of days. But Amit, thank you for joining us here on News9. Appreciate your time and your thoughts, sir.
Thanks, Suyesh. Thank you for having me.
But before we wrap things up, remember, we are counting down to the big event that News9 is organizing this coming weekend. The News9 Global Summit is about the new India that is recognized as a rising economic power and a major global player. The theme of the summit is how India is poised for the next big leap. The What India Thinks Today Summit is being organized by the TV9 Group, and this edition of the summit is specially unmissable because the keynote will be delivered by none other than Prime Minister Narendra Modi. What India Thinks Today Summit is on February 25th, 26th and February 27th.
From Fragile 5 to Top 5, from a laggard to a leader, India under Modi has reimagined the world order. Presenting the second edition of TV9, What India Thinks Today. Summit theme, India poised for the next big leap. Listen to Prime Minister Modi unveil his vision for Viksit Bharat at News9 Global